We saw it at PropTech and Portal Watch a couple of weeks ago, and Harvey and I have definitely noticed it covering the industry over the last couple of months. The pace of product innovation in the industry is accelerating. If you don't want to be left behind, if you want to keep users on your site and give them all the features that they are going to come to expect, you should talk to our sponsor, PropTech, who are absolutely at the forefront of making real estate portal experiences absolutely the best in class. Hello and welcome to the PPW Pod, bringing you news, views and interviews from the world of online marketplaces and PropTech. Here with Simon Baker. How are you, Simon?
I'm very good today, Ed. Thank you very much. It's Friday. Not going to argue.
Yeah. And Harvey Hancock, how are you?
Very good, Ed. Great to be back.
Cool. Today's episode is a news episode. Our previous news episode was all about CoStar, but other things did indeed happen while all that was going on, and we're going to get through them today. We start off with a bit of sad news, a little bit depressing. Harvey, why don't you tell us what's been going on at SeLoger in France?
Yeah. Hi, everyone. So SeLoger is one of the leading marketplaces in France, and news emerged this week that there are discussions underway for an unconfirmed number of redundancies, but it could be as high as 30% of its workforce. So this is a significant restructuring going on at SeLoger, and it means that there are potentially a lot of jobs at risk. I know, Ed, you tried to reach out to SeLoger earlier this week. I think they emailed you. So I'll hand back over to you for a quote, I think.
Yeah, thanks. So this was first reported on a local publication called L'Informé, which said that it was a third of jobs were going to be lost. I emailed SeLoger. Well, we're saying SeLoger. What we mean is Aviv France,
Aviv.
or actually, to be even more precise, Digital Classifieds France, which is the name of the parent company here. So it's SeLoger and also Meilleur Agent. Anyway, they confirmed that yes, there are planned what they're calling it a transformation project. They didn't confirm how many, but they did say that the procedure is expected to be completed during the first quarter of 2026. And they are in discussions with employee representatives to allocate the necessary resources to implement personalized support measures for employees who may be affected. It's pretty depressing news. They cited increased competition as well as plummeting transaction volumes. So I did a bit of research. Transaction volumes were 1.2 million in 2021 in France. They went down to 778,000 in 2023 and haven't really recovered since then. My question here for Simon is, we've seen, bad times with other markets, and they haven't necessarily affected leading portals as much as their agent customers. Why do you think this has happened in France? I mean, the example in my head, as always, is Rightmove. You have 2020, and their numbers go down a bit, but it's not too much of a serious thing. Why has this happened in France, and why has it happened without any kind of pandemic or huge meta problem in the world?
Yep. I think there's a number of things that come together. So like a little bit of a perfect storm. And I think we need to look at the macro and the micro. So the macro is the French economy you talked about. It's been a little bit of, as you said here, the number of transactions. I'm just looking at the numbers down from 1.2 million down to 780 odd thousand in 23. It's come back a little bit, is 920 odd thousand in 25, but it still hasn't reached that. So that's the macro issue, right? Then you've got sort of the next level of the macro issue, which is increased competition. If you think about it, Le Bon Coin is very focused on, building the business and executing incredibly well. And so, especially since the breakup of Adevinta and so on, or the sale of Adevinta, the delisting, the moving away. I mean, remember, with Adevinta, they had this project, I think it was called Pegasus, which was all about bringing onto a common technology platform. They got away from that. They sold the business to Permira and Black stone. And then what's happened is that's then everyone's being motivated internally to grow the business. So now you've got increased competition on SeLoger coming from Leboncoin in particular, but also there's a lot of upstarts in that market as well. And then I think the third one, which is micro, which is internal, the Aviv Group also went down a very big internally focused, moving to a single technology platform and so on under previous management. Now, the problem when you do those sort of projects is that everyone becomes internally focused. They all sort of look at each other. They're also saying, well, how do I get my products to the top of the list on the common platform? How do you serve me and what I want, rather than facing external? So I think you've got a combination of things. Now, clearly what's happened is in that, so they're focused, so SeLoger is focused internally. Leboncoin has been focusing externally because they're all motivated to get a good payout from an eventual sale at some point in time. And then third is you've got the macroeconomic environment. So everything comes together to basically mean that what SeLoger should have been doing is focusing externally and growing the business and optimizing everything, but they were focused internally. This is my external reading of this. Okay. And then of course, a new CEO comes in about, I guess maybe a year ago now, I'm not sure, a bit less than a year ago. And is very much focused on cleaning shop, fixing up the business, getting them all super profitable, because and clearly they're moving away from my reading, from a common single technology platform to, wait a second, let's get back to what we're meant to be doing, which is building a marketplace in a market, and being a leading player. Now, I've been down the path before of trying to move to a common platform, and I would absolutely recommend to everyone, do not do it, because you end up going down the world's biggest rabbit hole, and you can be distracted from the main game. And I think what we're seeing here is a little bit of that distraction coming back to bite the business, and unfortunately to ensure that they continue to move forward and have the level of profitability needed and so on. They're going through a restructuring, and as with all restructurings, there usually means that people are let go from the business. And as we all know, in Europe, when you want to restructure, that is a long process. It's not like the US where you can walk in one day and release 25% of your workforce and it's an instantaneous event. In Europe, you have to go through a consultation process. You've got redundancies. You've got a lot of governmental, hoops you have to jump through in that process. So I think it's from a human perspective, it's sad because people will lose their jobs. But however, there's the reality that some of this is a function of the market, and some of it's probably a little bit self-inflicted. And then what we don't know is the impact of AI on all of this, and whether that's also freeing up, AI is doing a lot of the heavy lifting now on technology and development, and it's freeing up, not as many people are needed in technology. We don't know the answer to that question. We can speculate, but I'd say that it is what it is. Okay. And we should keep an eye on this, and if anything changes or whatever, we should let people know.
Yeah, you mentioned the increased competition there. We have covered a lot of stories about Leboncoin recently. I mean, I'd say up until this year, Leboncoin was not a company that we wrote a lot about because they weren't, sending us their press releases. They weren't talking about their product, et cetera, et cetera. This year, Harvey, I think we must have covered 5 or 6 product updates from Leboncoin. So they are really focusing on real estate. But that's not the only competition. There's also Bien Ici, which is this third portal that's owned by agents, which recently allied with, I think it would have been the number 4 or number 5 player, Paru Vendu, which is a horizontal that kind of specializes in real estate. Anyway, the competition is not getting any easier for SeLoger, basically. And it will be interesting to see what happens over the next year or so, because as much as transactions have fallen in France, there's probably still good money to be made for whoever wins there. We'll move on. Harvey, there's a news of a possible very big sale in Israel. Why don't you fill us in?
Yeah, so we were speaking about Aviv. We're going to continue talking about Aviv because this is an Aviv-owned portal. The name of the portal is Yad2. It's a generalized marketplace in Israel, massive business, and it is reportedly being sold for $1.23 billion by a number of big name funds, including Blackstone, Apex, Francisco Partners, Warburg Pincus. There's a bunch of global investment funds that are interested in this business, reportedly valued at 1.23 billion, and the sales process is being managed by banks including Barclays and Citi. Yeah, another
Yeah,
big
thank you.
acquisition on the roadmap.
Yeah, thanks. So this is, I mean, for context, this is another Aviv Group company. So Aviv Group, for those who don't know, used to be the kind of classifieds division of the German media giant Axel Springer. Earlier this year, Axel Springer sold, I think they've still got 10% of their share in Aviv Group, but they sold the
Correct.
majority stake to KKR, another private equity firm. And I think this is probably why we're seeing all of these changes, right, Simon?
Yeah, absolutely inevitable. When you looked at the assets owned by the Aviv Group, sort of Yad was sort of stuck out by itself. You had SeLoger, Immowelt, Immonet, all real estate portals, but Yad is a general classified site. So it didn't sort of fit the mold of what they had, and secondly, it's if you want to include Israel as loosely defined as being part of Europe, then it was European, but in reality, it wasn't even part of that European footprint. When you've got sort of France, Germany, Belgium, and that area all closely put together, and then you had sort of over here. So it's not surprising that they chose to sell off that asset. It's sort of common sense. So yeah, not surprising, makes a lot of sense, and 1.2 odd billion seems like a good price for it. I don't know much about Yad2, except
No,
it's the leading player in the Israeli market.
yeah, it seems like there's a lot going on at Aviv Group at the moment. The other news from Aviv Group is that friend of the podcast, Theo Maseka, has been brought in to lead the Immowelt portal, which is, I think, the number 2 in Germany. I think Kleinanzeigen might have something to say about that, but it's a challenger portal behind ImmoScout24 in Germany. We're hoping to talk to Theo. We're hoping to get his thoughts, if he's allowed to do so in the next few weeks.
Yeah. So just on that, you have to remember Immowelt was the they had Immowelt and Immonet that they merged together in Germany. So it was a very strong player in the German market, and Theo clearly has a very, very good. And I've known Theo personally for a very long time, and he's in fact I saw him a month ago now in South Africa when I went down to private property to present to 1,500 of his customers when he was running private property. So it's a pretty quick change from down there to he's literally now in Germany. Literally just send me a message. I'm not kidding. That second, right? Literally, it's just popped up on my screen. Theo.
Is he
But
what you're
what's
doing? Saying yes
interesting
to
is
coming on the podcast again?
no. It's just I just said let's catch up for a chat. But the fun thing, here's a fun fact. You now have Kleiner Zeiten Real Estate run by Simon Bray, and Immowelt Real Estate, or Immowelt being run by Theo Mseka. Both used to be CEOs of private property in South Africa, and both they know each other. So you've now got the South African cabal sort of now taking over the German attacker market in. So I think that's sort of quite funny. And then Theo also has a great pedigree. He also ran Uriet Emlak or Hepsi Emlak in Turkey as well. So he is a very, very smart operator. I've known him for a long time. I've known him from before even the Hepsi Emlak days, and he's a very good operator. Knows what he's doing, and I think he will certainly help Immowelt take on both Kleiner Zeiten, his mate, and also Scout24. So
Yeah.
I think the German market's about to very much heat up. So we should keep a good eye on that one.
Yeah, maybe.
Just a very quick one, just to say to everyone, we had Theo on the podcast a few months back, and it's a very good episode. Highly recommend searching it out on YouTube and having a listen. He is really one of the godfathers of portals, so definitely worth a listen.
Yeah, took the words out of my mouth, actually. Yeah, it is one of the best episodes we've done. Okay, we'll move on. The other big news that we haven't covered is I'll let Harvey talk about it. Something that has happened with Dubizzle Group that we were hoping to have good news for, but it's not turned out that way.
Yeah, this one was a bit of a nasty surprise because we were so excited, but unfortunately, Dubizzle Group cancelled an IPO barely 24 hours before it was going to float. The company did release a statement. They said that strong engagement and interest from investors, but the company has decided to postpone its planned IPO and assess optimal timing for the offering in the future. I don't want to say too much on this one because you don't want to upset anyone, but I'm sure Simon may have a couple of ideas on why this may have turned out the way it did.
I also don't like to upset people. I've been involved in a lot of IPOs from a board perspective, and written prospectuses and so on. A couple of thoughts around this. The first is the statement, strong support but decided to delay, sort of doesn't make sense to me. If there is strong support, then you would go ahead with an IPO. This is 2 years in the making, right? IPOs are not sort of wake up on Monday and you're listed by Friday. They're a long job. You have to clean up the company. Dubizzle Group offloaded non-core assets, things like Bangladesh, and they had, I think, Philippines and Indonesia with Lamudi, and they also offloaded some other stuff, which I honestly can't remember now.
I believe that the Pakistan asset wasn't included in the IPO.
No, that's correct. Zameen was not included in that for various reasons. So you go through that whole effort to get the business ready for IPO. As part of that process, you are forever sounding out the market, talking to brokers, talking to analysts, and so on. And if you're going to pull the trigger, you've got to be very sure that there is demand, and demand has a couple of elements. One is not only demand at IPO, but post-IPO demand, right? Because you don't want to list and then have someone sell your stock. No one wants to buy it. Your share price tanks, and once it's tanked, it takes forever to come back. And I think what has happened here is a number of things that there might have been a bit of misreading of the market. Okay, and clearly, while there was probably strong support outside of the region, there may not have been as much support inside the region. And I've been reading a fair number of news articles about this. And what seems to be is that while they were getting strong support from other markets, maybe out of the UK and a few other markets, where investors were very interested in what they're doing, there was not local support, and local support is critical if you're going to list on the Dubai Stock Exchange, the I can't remember, FDC or whatever company it is called. So that's sort of the first thing. Now clearly in these things, the role of the founders and CEOs to drive for the listing, and the role of the board is to ensure that that's the right thing to do. And something has gone astray here in this whole process. Now, the challenge is when you get to the start line, you put out a prospectus, you share all your numbers with the market, you should be pretty confident that you know what you're doing. I think there was sort of a potential spanner in the works when I think between announcing the listing and starting what's called the book build, which is where you run around and you get pricing of the IPO, and you are getting people to commit. Yeah, I'll commit to buy X number of shares at Y number of price, and then everyone that's what book building is, right? You're basically trying to build the demand and then trying to find out what's the best price, knowing that when you target that price. Now, between those 2 points, Property Finder announced a $250 million line of credit to grow the business. Okay, that's a bit of a shot across the bows in this whole process. So I think, my hypothesis is that may have spooked the local market a little bit and may have led to a bit of less excitement. And the other thing is, it's a loss-making business, right? So listing a loss-making business in a market that may not feel comfortable with listing of a loss-making business may have also contributed. Bottom line is, Imran and the team there will continue to grow a business. It's a great business. The underlying business is really good. Okay, that's the thing in this whole process. And my guess is that they will go back to the drawing board. They will have a rethink on how to do this, and probably they will think about doing another, relisting it or relisting, starting the listing again. But you'll have to take a bit of a breather. And they'll probably think of two dimensions. One is, do we do the Dubai exchange or the UAE, or do we maybe go for a different stock exchange? And you can do that. We listed the SeLoger Group on the Australian Stock Exchange. Okay, there's nothing stopping you changing where you list it. And then the second is they'll probably have a rethink about timing. What does the business need to really look like to list? Maybe we need to be profitable. Maybe we need to be something different. So it was surprising when they pulled it, because it was pulled at the minute to midnight type thing. But let's keep an eye on that one. Good, it's a great business, so no one's arguing that point. It's just more about, I think there's been a little bit of misreading of the market.
Yeah, we'll keep an eye on it. There's not much more to say on it. Okay, Harvey, you are about to earn your corn here a little bit. It's financial season. There's a lot of financials that have come in. We decided we're not going to go into depth on all of them. We're just going to read out some bullet points, some big kind of highlights from most of them. I'll let you get on with the big list that you've got in front of you there.
Yeah, wish me luck, ladies and gentlemen, and get your calculators out, because they're about to throw a whole lot of numbers at you. We're going to stick mostly to Europe, but we'll start with Scout24. So Scout24, market leader in Germany, recently added to the DAX index, recently announced acquisition of Fotocasa and Habitaclia in Spain. Group revenues hit 165.6 million for the quarter, up 15% year on year. EBITDA margin was 63%. That's flat year on year. Professional subscriptions up 15%. Private subscriptions up 17%. So good quarter for Scout24. Square Yards, big profitable turnaround from the same period in 2024. Revenue was $51 million for the revenue. EBITDA margin was 4%. EBITDA was 2.1 million. The Nordics.
Dollars. US dollars.
US dollars, yes.
We always get really confused whenever we have to write about crores and what's the one.
Crores and lakhs are very difficult numbers to understand. It's 10,000s and hundreds thousands, I think they are. So that's USD.
I've just got a formula that calculates it into dollars for us.
Writing up those financials is a nightmare. Anyway, you're distracting me. You're distracting me.
Sorry, but I'm trying to cut through the number reading session.
The noise. Go on then, Simon.
No. Keep going.
Okay. Vend. Let's talk about Vend. Christian joined us on the podcast a couple of months ago.
And at the conference.
And he spoke to us at the conference. Negligible 1% decline in revenues for the group this quarter. Real estate revenues, however, were up 9%. Real estate classifieds revenue was $34.5 million. And real estate EBITDA was $16.7 million. Anything to say, Simon? Or can I continue?
From with my real estate lens on, that's about a 45% EBITDA margin from the real estate segment, which is that's very good. Overall, being flat, even potentially, let's call it flat, 1% here or there, it doesn't really matter. That's probably driven by, I think they've got motoring, they've also got general classifieds and so on. So given we don't cover that, can't do a big deep dive on that segment, but 9% growth. I mean, if you think Scout24 up 15%, 62% EBITDA margin, Vend up 9% with a 45% EBITDA margin, And I think there'll be some opportunity for improving of that over time. So yeah, overall, not bad. $16 million, $17 million in the bank.
Not bad. Let's stay in the Nordics. Let's go to Alma Media, who a lot of you may not know Alma Media, but they run Etuovi, which is the leader in Finland. And they've also got a couple of other very difficult to pronounce portals that I will just blow over for now. Total group revenue at Alma Media for the quarter was 79.3 million, up 5.4% year on year. Marketplace revenues were 28.6 million, up 16.9%. And finally, we have North Media. North Media is the owner of Bollig Portal, which is the biggest portal in Denmark.
For rental.
For rentals. So so North Media total revenues were 44 million USD for the quarter, down 5% year on year. Of which digital services revenues were 6.2 million, down 2.5% year on year, and of which Bollig Portal revenues were USD 4.5 million, down 3% year on year. So a tough quarter for North Media. Simon, anything to add there? You look like you're thinking.
I mean, you're so used to seeing revenues growing in all these marketplaces. I mean, having been in the game for 20, 25, 26 years now, it's very rarely you see downward numbers. And I think what that says is that we need to start to understand why. And if you think about it, Scandinavia, you got Denmark, you've got Ven Group, everything sort of seems a little flat. Okay, in those areas. And the question is there a external reason for that occurring, or is there something just general downturn in the market, or is it something internal, increased competition and so on? So I think what we're going to do is have a bit of a deep dive on this at some point.
Let's have a look at Scandinavia, because Hemnet has also had a tough year, and they're a runaway market leader in Sweden, right?
Yeah, so I think what we might do is roll up the sleeves and have a bit of a deep dive into that market and see if we can markets, I should say, Norway, Finland, Denmark, Norway. Norway. Where am I missing? Sweden, Denmark. Yeah. Anyway, in that part of the world, we'll have to do a bit of a deep dive to understand what is happening, especially when you compare that to like clear leaders with Scout24 up 15%.
Yeah, on that, we've just had this morning, in fact, one of them while we've been podcasting, Rightmove has sent us an update. Basically, I mean, it's a market leader. It's going to grow, right? They're just reaffirming the 2025 guidance. Headline numbers. The big headline number is the 70% underlying operating margin is unchanged. The guidance is unchanged. It will stay at 70%. And ARPA, so average revenue per agent growth of between 95 and 105 pounds for the year, not changed, right?
The question is what's we have to work out what percentage that is, but it seems like a strong growth.
Yeah, it's not telling us on. I'd have to put it into my spreadsheet, but this is just on the email. We've also had REA Group while we've been podcasting. Again, as expected. I'm just looking at it here. Actually, do you know what? We'll cover that on a different one because it's there's just
the gut feel is. But I think the way I'm viewing it, when I look at all this information, right? We've got SeLoger, increased competition, laying off people, We've got Scout24, clear leader, and so on. This is what's happening. You've got attackers in Germany, Kleine Zeitung and Immowelt, changing leadership with the South African guys coming in and running both of them. You've got Vend, and you've got even maybe not so much Alma Media, but also North Media, etc. under pressure. I think we need to sort of split the world into sort of, I think, three categories. Clear leaders. Well, the rich get richer. Okay, put it bluntly, right? No different to Elon Musk today becoming a trillionaire.
Trillionaire. What's all that about?
I don't even go there, because why would shareholders approve that much pay in equity as the same day that Tesla announces a decline in sales? Okay, so there's a disconnect there, right? The disconnect between the person running it and the physical company itself. we move on because it's got nothing to do with us.
It's nothing to do with
Right.
us.
So you got the rich getting richer. Okay, you've got those who may be in leadership positions but super competitive, Le Bon Coin, SeLoger, super competitive, and so on. We should do a bit of a deep dive into Italy with Immobiliare and Idealista, because I think that's another market where it's far more competitive. And we've got to get, maybe that level of competition is really starting to suck out the profitability in the market. And then you've got other markets, those who are in the attacker modes, are they really making any progress? And I don't know, but I think we need to understand that. So I think we've got like society as a whole, there's a sort of expanding between the rich getting richer and what was it? The rich get richer and the poor get the picture. That was a Midnight Oil song. Don't worry. Anyway, as you expand that out, we're seeing this sort of movement. And the question is, can the disruptors like Andy Florence and the CoStar guys with Domain in Australia, with Homes and with On the Market, bridge those gaps, right? That's the interesting, I think, story we need to investigate progressively over the next 6 to 12 months. And I think that's the general theme, that one of the themes that we'll just run with, because that is where it's getting very interesting.
Yeah, can I drop in just one little quote, one bit of context before we move on from financials completely? I didn't know this, but I think it's worth educating our readers, is that Scout24 in its quarterly statement said that the Fotocasa and Habitaclia acquisitions give the company access to the attractive Spanish market, and interestingly, the most important foreign market for German property buyers. So both Spanish portals will benefit from Scout24's long-standing market expertise, technological know-how, and product portfolio. So for those of you who are thinking, why on earth is Germany going to Spain? That's why. The foreign buyers or German buyers looking for international properties are mostly going to Spain, and there is some logic in Scout24 expanding to Spain as opposed to, say, for example, Italy, France, or the UK.
Yep.
Yeah,
And
that
that
reminded
actually
me.
is. You go ahead.
I was going to say, it reminded me of, you remember a few years ago, Germany, kind of tongue-in-cheek, but not so tongue-in-cheek, offered to buy the island of Mallorca.
Just to flood it with German holiday makers.
I think they're already there. I think I think what's interesting, and I think we're trying to set up a podcast with a couple of those Spanish cross-border portals. Think Spain and Green Acres. We had them on the stage at the conference in Madrid. I think there's some interesting insights into cross-border marketing that we can get from them. Now, the one thing we've always got to keep in mind here, Spain is a relatively unique beast in that somewhere between 10 and 15%, maybe a little bit more, and certainly more in some markets of sales are to international buyers. Right. So that's not a common occurrence throughout Europe, and it's for very obvious reasons, because you guys live there. I got a property there. It's a beautiful place, right? And it's and honestly, you'd have to go a long way to find fault with most things about Spain, especially compared to a lot of other markets. It's got everything that you need, especially if you are in Madrid. Not that we're promoting Madrid, but Madrid's a bloody cool place. Okay, so I think there's a lot of uniqueness in that relationship between Northern Europe and Spain, and sort of cross-border transactions. Now clearly, Scout24 is not buying Fotocasa and Habitaclia because of all the buyers in Spain buying German properties. Okay, that's not occurring, but it is certainly the demand that Scout24 already has, the audience it already has. It wants to then say, well, some of that audience clearly loves Spain. So if they want to access the market, then accessing the market through Fotocasa and Habitaclia is quite logical. And I think when we eventually do our podcast with the guys at Think Spain and Green Acres, we can talk very deeply about this cross-border transaction world. Remember, Spain, it's not only Germans, it's a lot of Scandinavians. I mean, if you go to Marbella, it's little Sweden. Okay, you go, parts of the Spanish coast is just English, right?
English,
They don't speak
Russian.
any Spanish, and Russian and so on. So I think that's a very interesting topic to talk about, because this cross-border marketing is one that is often just not thought about. But both Green Acres and Think Spain are great little businesses, profitable, going good growth, and very well run. And the interesting thing is they've both been in the market for like 20 years. So the guys running them absolutely know the business backwards. So I think we'll get Benoit and Bernie on the call soon. And then what was interesting is we saw the other day with Idealista's failed attempt to buy Kiero, and they put out a video, which I shared with you guys, and I'm sure we can throw in on the website somewhere, because I think it'd be interesting to talk about why the deal didn't happen, and then how they're viewing the market. And they're talking about how they expand their business into Spain even more. So that is a competitive market, but one in which if you execute well, you can be a very profitable but small business.
All right. We will move on from the financials. We've got one other kind of, I'm not even going to call it a news story. It's just something that Harvey and I have noticed over the last, I don't know how long you'd say, like last few months. The pace of product innovation seems to be going up. We are getting a record number of news stories to cover of real estate portals innovating. We'll call it innovating, but basically doing things with their products. Now, I'm happy about this, because anybody who saw me on stage at PropTech and Portal Watch in Madrid basically just got told off, finger wagged at for 20 minutes, saying you need to innovate and you need to invest in your product. So yeah, when you do actually innovate, we should actually say well done, right? Harvey, like, you cover all of these. Usually when there's a product innovation, I send it to you. What are some that stood out quickly?
I mean, the obvious one is that we've had a lot of people starting to invest in bits of virtual staging, redecorating images, things like that, as our sponsor PropTech very generously offers a service for. But recently, it's all about AI search, I think. We've had a lot of big portals introduce AI search literally in the last 8 to 12 weeks, maybe even less. Photocasa, Scout24, Realtor.com, and Homes.com all releasing AI search. These are big businesses that are starting to invest some serious time and money into AI search functions for consumers looking for properties. Those are the two ones that I think are starting to become a little bit closer to what you would call table stakes. Standard fare for a portal, virtual staging, and AI search are starting to become a little bit more prominent on big name portals.
Yeah, for sure. Other quickly, a shout out to another friend of the podcast, Mal McCallion's new project. Again, if you were at the conference a few weeks ago, you would have heard about his new project. I'm not even sure if he's calling it a portal, a discovery platform in the UK. It has a name. It's got a launch date. My Porter, look out for it. I'm sure we'll be covering it a lot more. Congratulations to Mal and the team. It looks like a lot of hard work went into that.
And it's a brilliant looking product, by the way. It looks really good. The demo that he gave us on stage was excellent, and I hope it gets traction.
Yeah. All right, gentlemen. I know we are strapped for time. We have Harvey and I, a lot of news to write up that I've just seen coming in on my other screen here. So we'll leave it there. Thank you very much for your time, and we'll see you on the next episode.
Bye-bye.
Thanks all. Bye-bye.